I think with the craze of the meme stocks coming back alive once again, we can definitely extrapolate a few different things here and some things that we probably kind of take for granted. Like the crazy run up that GameStop just had, going from $10 a share, shooting past $37 a share, up 346% in a few trading days, which is now down 25% on the day. So what can we extrapolate from this price action? Number one is you better get in early if you're going to be taking on these high risks and get out with any sort of gain. But I don't recommend doing that, obviously. Now, of course, it's going to come down to a Buffett saying. Price is what we pay, value is what we get. And I feel bad for the people that have jumped in over $30 a share on GameStop because that's the price that they paid. But what's the true value of the company that they just bought? And so with markets hitting newer highs, it's definitely getting harder to figure out where that value is within this market. I mean, when we look at a company like Apple trading at nearly 30 times earnings with pretty much limited growth and manufacturing EPS growth with buybacks, are these the type of stocks we really want to be dumping a tremendous amount of money in? Meaning, is Apple such a deal today that we think we're going to get outstanding returns tomorrow? And in my opinion, I think the answer is no here. Now, with Google trading at 27 times earnings and possible more growth prospects in its pipeline, I definitely think you can make it a story for Google here. Now, when Meta fell from Graceland, going from over $370 a share down to the low 90s, this was a tremendous buying opportunity, and this was pretty obvious. Price is what we paid, which you would have had the opportunity to buy Meta in the $90 to $125 range for an extended period of time. And value is what we would have received. The value of a company that was discounted 60% but has grown its cash flows over 100%. Now, of course, on this channel, I always recommend just dollar cost averaging into a broadly diversified index, set it and forget it. But this channel is specifically designed for individual stock pickers who want to see a different process. And we've broken down everything from Palantir to Raytheon Technologies to PayPal to CVS and Cisco, which are two of my larger holdings that have definitely been underperformers. And so when I think about GARP, growth at a reasonable price, and I think about price is what we pay and value is what we get, I definitely think that these seem like value traps, but I don't think they are quite value traps. It could definitely take multiple years for value to present itself. And so when I think about a market trading at 26 times earnings, forward PE sitting probably closer to 22, maybe even 23 times earnings with the recent rally that we've had, I look at these types of companies that have kind of been trading at low multiples for an extended period of time, but have had recent acquisitions that I think could re-accelerate top line growth, which then puts it in that GARP category. And for the first 6 months, it's definitely looking like both of these companies' turnaround stories are getting a little harder to see. But when we think about the type of prices I'm paying for these stocks, I definitely think there is room for opportunity in the future. And I don't necessarily see that for a lot of the Mag 7s. And to be quite honest with you, for even some of the indexes now, because the indexes have this passivity of money flowing to them, and it's really inflating valuations. And so at this point in time, I'm really going to be focused on just holding on to the core positions I have and really building up some cash here, because I need to see an opportunity like maybe Meta again, or some sort of financial dysfunction that could take place, because I think valuations are just so stretched that it's just in a scary territory. And I do think we're going to hit newer highs, we're going to get more frothy, and we are definitely in bubble territory. And I also believe with the meme stock mania alive and well, tells me that there's still a tremendous amount of liquidity out there. And when is the best time to buy stocks is when there's no liquidity. And how can you how would you position yourself is when you actually have liquidity to buy stuff when nobody else does. And I just think we're at a point in time, and I've said it a couple different times, where it's getting harder and harder to wrap your head around these valuations. And so at this point in time, keeping my core positions, still going to evaluate stocks. If you guys have stocks that you're looking at, you think are really, really good deals that have good growth opportunities, leave a comment down below detailed on that stock and I'll try to get to it. But as always, guys, appreciate your time. We will see you in the next one.